stop below the wick. You will simply target the 2R or 1.5 according to your need. All right, 0.38 level. Stop below the wick low, target 2R. Simple. People change their strategy and doubt their strategy. Again, we got signal, set Fibonacci, set trade, got the 2R. So that's why do not change your strategy after some series of loss. Hi everyone, I am Harsh, and today in this video I am gonna show you a simple trading strategy. And for this strategy you don't need any kind of market structure knowledge, supply, demand, trend, and nothing. You don't need any kind of trading knowledge. Just copy this strategy and make your money. It's very simple, anyone can use it, any beginner can use it. Okay, so the strategy name is daily engulfing bar strategy. So if you don't know what is engulfing candle, let me explain you. So whenever market green candle swept liquidity of red candle and close above it, we call it engulfing candle. Okay, now sometimes it give body closing, sometimes it don't give body closing. In this both scenario, this is valid, and it is invalid when this happen between a big candle. Okay, in this scenario it is also swept liquidity and didn't closed, but it is invalid because it is happening between the inside bar, between this master candle. Okay, so first and second scenario is valid, but third scenario is invalid. Okay, now what is liquidity sweep? Whenever price break previous candle low but didn't closed and instantly reject, we call it liquidity sweep. So in this, price did liquidity swept and closed above bearish candle. So this is first condition. Now in second scenario, price swept liquidity and also swept above liquidity, didn't closed above it, so it is also valid because we have a still green candle. Okay, now how we are going to take the entry? So when first and second scenario happen, we will take trade. Now this only work on daily chart because institutions trade on the higher time frame candles, right? They don't trade 1 minute chart, 5 minute chart, 15 minute chart. They trade on higher time frames like weekly, daily, monthly. So it is also work on weekly, monthly, but the problem is on the weekly and monthly we don't find so many trades. So that's why we are using daily chart. Daily is enough to make money. Okay, we don't go below daily. Do not use 4 hour, 2 hour, 1 hour, nothing. Daily time frame is minimum required. Okay, so now you understand the strategy. We need liquidity sweep and body closing. We need liquidity sweep and wick is also valid, and it is invalid when this setup happen between the big candle. Avoid it. Okay, so first and second is valid. Now how we are going to take the entry, let me show you. So when the condition happened, you will take the Fibonacci and you will take the Fibonacci and you will place it below the bottom of the candle and top of the candle, and you will set your long entry at 50%. Okay, and wick low will be used as your stop loss, and you will simply target 2R or 1.5R. 1.5 is enough because sometimes what happened, price don't give 2R and you will lose all of your gains. Okay, entry, stop below this 1.5, simple. Alright guys, so this is the theory, and in this third scenario it is invalid, as you know. So this is the theory. Now let me show you some examples on the chart so you will get more clarity. Alright guys, so you don't need to see these things manually because you can use the simple indicator, which is Dante bullish bearish engulfing indicator. You can just use this and it will show you on charts arrows. So make your trading really simple. Now let me show you examples on the gold chart. Now you can use this strategy on any pair, on Forex, crypto, stocks, whatever you trade. So let me show you some real examples so you will get the clarity. So we are going to gold. Now this is the gold 1 day chart. Okay, as you can see. So this work on both side, bullish and bearish both side. So here we have our indicator. This is the gold chart. All right, so the indicator will show you these green arrows. So the indicator will show you these green arrows. So here is the example number 1. Here indicator showed you the green arrow. Now you will take out your fib. All right, you will set the entry at 0.5, stop below the wick. You will simply target the 2R or 1.5 according to your need. All right, target 1, hit. Again the indicator showed you arrow. You will take out your fib. All right, entry at 0.5. Now entry didn't triggered because price didn't retrace 0.5, so that's why I prefer you to use 0.38 level, because price always hit 0.38 level. Stop below the wick low, target 2R. Simple. So far we made +2 +2 4R. All right guys, now let me show you further. Now here we got the bearish setup. So for bearish it will show you red arrow, for bullish it will show you green arrow. All right, Fibonacci tool, entry at 0.38. Now this is your personal preference to use 0.38 or 0.5, because sometimes price do not come to 0.5 and you can miss the trade. So backtest it and check yourself which one suits you. This is your risk preference. So here stop loss will hit. So +2 +2 -1. Okay, on to the next. Here we have the bearish candle. All right, 0.5, stop above the wick. So entry triggered and price just consolidate in a range. So your entry triggered at 12 June and it is consolidated till 28 June. It's almost 15 days. So what you can do is close the trade manually, and so this is a break even. All right, because guys, if the movement is not coming within maximum 3 days, just close it at a break even. It will not gonna work out. Again, entry trigger 0.38 entry, stop, entry trigger 1.5 hour done. So the 1.5 hour is really safe, because sometimes 2 hour do not come. Okay, here the bullish signal, Fibonacci tool, entry set at 0.38. I personally use 0.38 level, and 1.5 hour done. 1.5 hour really safe. I personally use 1.5 hour. You can use 2 hour. It's totally depend on you. Alright, let me show you 5 and 6 more examples. Here the bearish signal, we got set our entry, stop hit. Okay, 1 2 3 4 5 6 7 trade. On to the next. Alright guys, so here we got the bearish signal. So we took our Fibonacci, and again it is -1. On to the next. We got the bullish signal. We set our Fibonacci, but price didn't retrace, so we missed the trade, this one. On to the next. So this is also happened, sometimes we miss the entry. Bearish signal, again took the Fibonacci, and again -1. We got 3 back to back -1. This is where people change their strategy and doubt their strategy. Again we got signal, set Fibonacci, set trade, got the 2 hour. So that's why do not change your strategy after some series of losses, and stick to the end of the video, and I'm gonna share with you some tip so you can avoid these continuous losses. So now we didn't get any signal, so here is the tip. When the market structure is bullish on the daily chart, you will avoid the bearish trades, okay, and when the price is bearish, you will avoid the bullish signal, because indicator do not understand the difference. It will send you signal. It is your common sense to avoid these trades. So it is simple. When price is bullish, one daily candle, it's not enough to push the price lower. It is a common sense, right? So in the bullish scenario, avoid the bearish signal, and in the bearish scenario, avoid the bullish signal. Only take the bullish engulfing setups if the trend is upside, and only take the bearish setup if the trend is downside. Alright guys, so it was the tip. It will increase your win rate massively. Okay, so let me summarize the video. What we need is simple. We need a bullish engulfing candle and we need a bearish engulfing candle. Okay, and we will use our Fibonacci. We will set our entry at 0.38. we will target 2 hour or 1.5 hour. This is your personal preference. Backtest the strategy and test what's working for you. And if you like the video, please subscribe the channel and leave a comment. It will motivate me to make further videos. And thank you for watching.